Hi everyone, I'm James Harte from littlefishfx.com. Thank you for joining me for this week's Forex Education Hour. In today's session, we're going to take a look at another really interesting area of technical analysis, and that is using trend lines and channels. Now, we've previously looked at how static support and resistance can help us frame the markets, and trend lines and channels work in the same way. So in this session, we're going to take a look at how to properly identify trend lines and channels and talk about the different ways that you can use them in your trading, looking at some basic and advanced methods, and also looking at how you can combine trend lines and channels with other areas of technical analysis, such as support and resistance and Fibonacci analysis. So as ever, if you have any questions during the presentation, please just write in the chat function and I'll stop periodically to answer them. I'll just share my screen and we'll get going. Okay, so first of all, what are trend lines? So bottom line is trend lines connect price points on a chart to give us an indication of how price is moving and if price is following any clear directional bias. So if we can connect points along an upward sloping gradient, we have a bullish trend, and if we can connect points along a downward sloping gradient, we have a bearish trend. If we can't connect any price points along any clear slope at all, then the high likelihood is that we have no trend and we're in some sort of range or consolidation period. So we can see here we have an example of a nice clear bearish trend line connecting price points along a lower gradient. Now the key thing to point out here is that you'll notice I haven't drawn the line from the very high. I've looked to capture the most outer price points that dictate the bearish trend line and allow me to fit a sloping line where all of the price action is contained beneath the line. So this is the inverse. This is a bullish trend line. So you can see here that I've connected price points along an upward sloping gradient. And again, you'll see that the price points I've connected mean that all of the price action is held above the rising trend line. The trend line doesn't dissect any of the price action at all. It sits just along the outer edges of price action. So that brings us on to how we identify trend lines. Now, as I briefly touched on there in those two examples, there are a few basic rules that we should look to adhere to when identifying trend lines. Now, these are just the core foundation guidelines that would give for identifying trend lines. So for those of you who are familiar with trend lines already, we'll move on to some more advanced stuff shortly. But just as a quick basic refresher for people, this is how we identify trend lines. So as with all areas of technical analysis, there are obviously the advanced methods. So we will get onto those shortly, but we'll just cover the basics first of all. So firstly, we want to make sure that our trend line runs along the outer perimeter of price action on the charts. So if we have an upward sloping trend line, all the price action needs to be above it. And if we have a downward sloping trend line, all the price action needs to be below it. So this means that most of the time we won't necessarily be drawing our lines from the very high or the very low, and we won't be connecting all of the price points. So we want to fit our lines to the very edge of the price action, which means that we need to be updating our lines as price action unfolds to take into account new swings in price. Now, secondly, our trend lines always need to connect at least 2 price points to give us a trend line. Now, the more you can connect along the trend line, the more solid it is. Now, a lot of people say that you need to identify at least 3 touches to have a confirmed trend line. But my experience is that the 2 touches of a trend line is enough, especially on the higher time frames where I do the majority of my work. So here we have an example of a nice clear bullish trend line, and you'll notice how the trend line again runs along the very outer edge of price action, as we just noted in the rules. So in this instance, we picked up the low of the period, but as I said, this won't always be the case because we're looking to capture the most outer price points. So again, we take the very low and move it along to the most outer swing low that dictates our bullish trend, and that is this swing low here. Now, you can see that if we had run the line connecting the very low to this price point, we would have had a much steeper gradient to our line, which would have cut through all of this price action here. And so that would have been incorrect. So this is the example of the trend line identified incorrectly, because instead of mapping the most outer price points, we've actually dissected the price actions. We've run the trend line through the price action. So this is incorrect. We always want to make sure that our trend lines capture the very outer points in price. Now, there's a very important point to consider at this stage, and that is that looking at the most recent price action, we can obviously see that this trend line is incorrect because it doesn't run along the outer edges of price. But up until the point that the trend line broke through price action here, or the price action broke through the trend line rather, this trend line was actually correct. So it wasn't up until this point here that we actually needed to adjust our trend line. So once price broke through our trend line at this point, we then needed to adjust to take into account this swing point. So this gives us a trend line that looks like this. And you can see again that this trend line is now correct up until this area here, where the price action breaks through the trend line once again. So once again, we need to update our trend line and move it to consider the most recent price action. So finally, our trend line looks like this. This gives us the absolute bullish trend line, the line that we used as our initial example. So you can see again, it adheres to our rules whereby all of the price action is contained above the trend line. And you can see now how plotting trend lines is about monitoring the price action and adjusting your lines accordingly. So although the previous lines that we showed that cut through price action are incorrect now, previously they would have been correct. Okay, so at earlier stages in time, they would have been correct. So the initial trend line that captured this low was correct until it was broken here. The trend line that connected the low to this point was correct until it was broken here. So it really is a case of continually updating our trend lines. Now, as you get more confident with your trend line analysis, you will then be able to add a really interesting aspect to your trend line study. And this is where you can start to leave old trend lines in place. And you'll often see that a trend line that was once valid, once it's broken, still retains validity and can become something of a price pivot point. So we just discussed how you need to update your trend lines to account for new price swings. But as you get more comfortable, you can start to use older trend lines in your analysis. So here is a great example of what I mean. This is the dollar Swiss daily chart over the last year and a half or so. Now, if we look at this low as being the very low of the period from which we start to map our trend line as price trades higher. So the very first low we get is this swing low. So we get our low here, then the first swing low we get is this point. And so we get our first trend line that runs along this gradient. So we join these 2 points to give us our trend line. And now, instead of updating the trend line, as we just looked at in those previous examples, we'll simply leave the old trend lines in place as we get new price points. So once price breaks through that trend line, we then get a new swing point here, and we attach a new trend line from this low to that low. You can see that price trades higher from that point, actually moves back above the initial trend line, drops back below it, and then we break our second trend line at this point to register a new swing low in the period. So we then draw a trend line from this swing low to this swing low, and you can see that price respects this trend line for quite a while longer. We get another bounce of it here, confirming the trend line. We hold above it. We actually move back up above our second trend line, test the first trend line, trade back down, still above this trend line, until we break it at this point and register a new swing low, from which point we then attach our final trend line, which is the most recent one, from this low to this low here. So you can see, looking back at these older trend lines, how they have remained important to the market. So where we would give the basic guidelines as updating our trend lines as price action unfolds, you can see that actually keeping our older trend lines on the charts creates some interesting opportunities. So you can see there are several areas where we've tested previous trend lines and the market has respected them. And we'll come on to how we can trade trend lines shortly. So we've just looked at how to identify our trend lines. We've looked at how keeping old trend lines in play can see price still respecting these trend lines. So now we need to talk about how to trade them. So I'm sure that you already have some ideas based on the examples that we've looked at so far. And the great thing about trading with trend lines is that it can be really simple but really effective. Now, as with the other areas of technical analysis that we've looked at previously, such as support and resistance, Fibonacci, etc., the key is in identifying the correct lines, the correct elements. And once you have those down, the actual trading itself can be quite straightforward. So for a basic strategy to consider, first of all, we'll think about buying trend line support for a bullish trade and selling into descending trend line resistance for a bearish trade. Okay. So here we have a really clear example of a buy trade using a bullish trend line. So again, just to clarify, to identify a tradable trend line, I only look for 2 points, the initial swing point and then a secondary point, and then I will often trade the third touch of the trend line. Again, some people say that you have to have 3 touches of a trend line to identify it or to confirm it, but from experience, I'm happy to draw a line attaching 2 points and trade the third touch. So we can see that having identified our first swing point and drawn our trend line, we then extrapolate the line forward. And so imagine that we're around this point in time where we've just had this big run up off the trend line touch. We've got our trend line in place, and now we're monitoring price, looking for price to trade back down and touch the trend line. So price comes back down at this point, touches the trend line. We pierce it very slightly and then close back above. And we can see at this point that the trend line has been respected. So we've tested the line and the line has held. So we could potentially put a trade on at this point. Or we could wait for further confirmation by way of a proper price action signal. Now we can actually see that in the next couple of candles after touching the trend line, we get a really nice price action signal with this great bullish engulfing candle. Now, for those of you who aren't familiar with candlestick reading, we'll look at that in one of the coming sessions. But in terms of trading the trend lines, this is essentially the bottom line when we're looking at using this basic strategy. We want to monitor the trend line once we have identified it, and wait for price to trade back into the trend line, looking to initiate a trade. Now, there are all sorts of ways that we can actually trade trend lines in terms of our entry mechanism. And it really comes down to applying some of your own personal trading preferences. Now, this is a daily trend line. So we could look to take this as a swing trade, targeting a move back up into these highs. Or we could drop down onto the lower time frames and we could play a quick scalp trade, anticipating a nice immediate reaction off the line. In terms of your actual entry trigger then, again, it comes down to personal preference. Now, you could be more aggressive and just play a strike of the line, or you could be more conservative and look for price action confirmation, like we just saw with the bullish engulfing candle here that acts as an entry point for a long trade off this point. And typically, this is how I trade trend lines, actually. I look for price action to confirm the line. So generally, I'll watch out for pin bars at trend line touches or engulfing candles, etc., that form on the reaction off the line, as we saw in this example. And essentially, I'm looking for price to touch the line or even breach the line slightly and then close back inside it. And in fact, I actually prefer price to pierce the line slightly, to probe outside of it and then reverse to close back inside, because that signals to me that the order flow at that level is particularly active, and that can be a good signal that the line is well respected. Now, as we've looked at in previous sessions, whenever we are conducting analysis to identify a trade location, we want to use confluence. We want to identify a confluence of factors that signal to us the location that we are monitoring is a good place to take a trade. Now, in previous sessions, we've looked at support and resistance and using Fibonacci levels. And so these are the sort of technical elements that we can look to combine with our trend line analysis to build the case for placing a trade. And so what I mean by that is that we want to look to identify areas on a trend line that sync up with key structural support and resistance levels and or key Fibonacci levels, because these can be much stronger candidates for trading. So we'll take a look at some examples now. Before we do, are there any questions that I can answer at this point? Okay, great. Well, as I say, if you have any questions, please just write them in the chat function and I'll stop to answer them as we go along. Okay, so in this image, you can see that I've highlighted the touch of a trend line here that perfectly illustrates the sort of technical confluence I'm talking about. So first of all, you can see very clearly and simply that I've drawn a trend line attaching these 2 points. So we have this high point here attached to this swing high point here to give us our trend line. So let's imagine that we're roughly at this point in time where we've broken down through these lows, we've got our trend line in place, and we're now monitoring the trend line, looking for price action to trade back up and retest the trend line. So we're looking at the trend line on our charts, we're thinking about locations where we would like to do some business, and we're starting to identify points that stand out as being stronger candidates. So looking at the chart and imagining we're at this point in time, where would the ideal location be for us to get short? Well, we can see that we had this really nice support level here at this zone, which held for a couple of days. We got 3 to 4 touches of the level, confirming good demand there. We then sold off, broke down through this level and made new lows. So for those of you who saw the support and resistance webinar, you'll know that when we identify a broken support level like this, we then monitor price for a retest of the level, which we expect will now act as resistance due to the shifting order flow dynamic at that level. So we know that if we trade up and retest the trend line around this point, that we have good structural confluence. So we can go ahead and mark that level in as being one to watch. So we have our broken support in place, giving us now resistance. And now we can go ahead and also add in a Fibonacci measurement, measuring from this swing point to this low, to see if we get any Fibonacci levels that sync up with the structural resistance. Okay, and so with that Fibonacci measurement in place, you can see here that the 50% Fibonacci level, which again, for those of you who saw the Fibonacci webinar, you'll know that this is one of the key levels to focus on. Well, this level actually lines up perfectly with this area here, where we have these broken lows acting as resistance, and we have our trend line resistance. So this is an area that we would be highlighting as a strong candidate and an ideal location, looking to get short off the trend line. Now you can actually see that we also get a really nice price action signal there, because we also get a bearish pin bar at the level. So this is a great entry trigger. And the bearish pin bar, in addition to the structural confluence and the Fibonacci confluence, is a really great example of how we can combine technical elements with trend lines to build up a trade idea. And as I say, and as I've said a lot in previous webinars, we want to stick to the clearest setups. So this example is a brilliant example of what I would class as a grade A setup, okay? We have really great confluence between key technical elements which sync up with our trend line. We've got the structural confluence by way of these broken lows, now turned resistance. We've got our key Fibonacci level with the 50% retracement. We trade up and test our trend line, and those two elements in confluence with the trend line would be good enough for me to trade the level. So I'd be happy to trade the level there, trade that location. But then for those of you who are more conservative and would like to wait for a price action signal at this point, we then get further confirmation by way of the bearish pin bar. So this is a really great setup. We don't have to question it. We don't have to force the analysis. This jumps out at us. And these are the sort of trades that you want to keep an eye out for, because when these set up, you know that you've got a really great trade to take. So I've used this as an example because it really typifies the sort of trades that you want to keep an eye out for. One second, got a question there. Hi, no screen. Is anybody else having visual problems? I don't think so. I can't see any other comments referring to that. And maybe try refreshing your browser. Okay, so yeah, I've used this as an example because it really typifies what I would class as a fantastic trade. And you can actually see in this example that we get a sell-off of almost 500 pips worth of movement. So this is an hourly chart, sterling Kiwi hourly chart. So taking this trade would give you quite a tight risk element. Your stop wouldn't have to be particularly wide on this. And we catch a fantastic sell-off. So if you just stick to taking these sort of setups, these really clear setups, then it will make trading much easier for you. And generally, you'll be more successful because you'll avoid the sort of mistakes that so many people make, getting caught up in taking subpar trades that just eat away at their capital. Okay, so here is another example of exactly the same setup that we just looked at. Okay, you can see again that we have really strong confluence between our trend line resistance, our key structural level at these broken lows, and our key Fibonacci levels, where we get 38.2% retracement that lines up at this level perfectly. And we even get the 50% Fibonacci retracement sitting just above the level in case we just probe the trend line slightly and reverse. And actually, you can see once again that we get a bearish pin bar there. So we get our price action confirmation. So I hope that these examples are helping you to understand exactly the sort of setups that you should be looking to trade when you're using your trend line analysis. And again, it's very simple. It's very straightforward. We simply plot our trend lines. Once we have our trend lines identified, we're then looking for locations along the trend line that present confluence, that have structural confluence, that have Fibonacci confluence, and we're monitoring price, waiting for it to trade back into these areas where we can feel confident about taking a trade with these technical elements in confluence. So this is one of the ways that we can trade using trend lines, looking to buy trend line support and sell trend line resistance. But in the same way as discussed during the support and resistance webinar, we know that the order flow dynamic at these levels, which makes them work as support and resistance, is always changing. And so we have other options available in how we trade them, specifically once they've been broken. So we'll take a look now at another way that we can trade trend lines, and that is in a slightly more advanced way to look to trade the retests of broken trend lines. Just stop and answer a question quickly. Do you have a preferred time frame that you consider more accurate for a day trader, or are trend lines equally accurate regardless of time frame? I personally don't do a great deal of day trading as such on the lower time frames. I tend to stick to weekly, daily, 4-hour, and sometimes the 1 hour. I think that wherever you can identify a really solid trend line that has good touches, that you can feel confident about it working. Now, obviously, I don't think that if you're looking at trading trend lines on the 5-minute chart, that they'll necessarily be respected as well as trend lines on daily time frame or the weekly time frame. But where you have a valid trend line, it's definitely valid for the time frame that you're trading it. So it really just depends on the time frames that you trade as to how well these trend lines are suitable for you, as to how well you can use them. But yeah, I don't think I'd be looking to use 5-minute trend lines or 15-minute trend lines in the same way that I would be using daily trend lines. And a lot of the day traders that I know, or the scalpers, actually use higher time frame trend lines, but then trade them on the lower time frames to take their scalping positions. Okay, so we'll move on and look at how we can trade trend lines using the retests of broken trend lines. So as I just mentioned in the previous example, oh, 1 second. Oh, okay, thank you. Yeah, no problem. Again, if you have any questions during the presentation, just write them in and I'll stop to answer them. Okay, yeah, so as I mentioned, the premise behind trading the retests of broken trend lines is the same as the principle behind trading the retests of broken support and resistance that we discussed in the support and resistance webinar. and that is the shifting order flow dynamic at these levels. So if we identify a bullish trend line, like we have here in this beautifully drawn example, you can see that we have the trend line acting as support where we know that there is good demand. Well, once price has broken down through that bullish trend line, we anticipate that that level, or that line rather, will now act as resistance with supply dominant at the level instead of demand. So the demand that was so strong along that gradient to keep price supported has since been overwhelmed by supply, and we anticipate that as price retests the line, supply will act as resistance and send price lower. So let's look at an example of this on the charts. Okay, so looking at this example, and this was the big trend line break in the dollar yen last year, for those of you who remember it. We had 3 solid touches here, giving us our really well respected trend line. We came just short of a 4th touch there. You can see that price was respecting this trend line really well, moving higher. But then at this point here, late summer, we got this really sharp sell-off. We broke down through that rising trend line and held below. So once we establish a break of a clear trend line, we are then looking to monitor price action, waiting for price to move back up and retest the broken trend line. So in this scenario, it's the retest of a broken bullish trend line, and we're looking to sell. If it was the retest of a broken bearish trend line, we would be looking to buy. So we can see price trades back up, runs all the way back up into that trend line, hits the trend line, and pauses right at it. We then reverse and close underneath the trend line. So we get our short entry here. Again, price action traders would note that we have an inside bar at the touch of the trend line and then a break of the inside bar lows. Again, for those of you not familiar with candlestick reading, we'll definitely cover that in one of the coming sessions, because that's some really interesting and useful stuff there. So yeah, we trade back up, retest our broken trend line, and this signals to us that the trend line that was once support has now become resistance. And again, your choice of entries comes down to your personal trading preferences. But what I really like about this example is that, again, we have that confluence between our trend line and a key structural zone. So you can see that we have these previous highs over here on the left. We have this broken low here. So this trend line lines up with good structural resistance. So again, just like trading trend lines in the basic way, we want to look to identify confluence, combining elements such as support and resistance, fibs, Fibonacci levels, etc., to strengthen our case for taking a trade. And you'll find many times that trend lines, where they line up with structural levels, can be really powerful entry locations. Okay, D asks, is the trend line always retested eventually? The trend line isn't always retested eventually, no. I guess at some point price may trade there, so it isn't always retested eventually. If you're looking on the shorter time frames at trend lines, there's a higher likelihood that the trend line will be retested at some point soon due to the shorter time frame nature of the price moves. If you're looking on the daily and weekly charts and you get a break of a trend line, it may take weeks, months, maybe years for price to trade back and retest the trend line. So it really depends on the time frame you're looking at as to how quickly the trend line is retested. Now, some traders like to simply trade the breakout of the trend line. So in this example, as price sells off through the trend line, through the rising trend line, we would get some traders that sell anticipating a change of trend. However, I tend to stay away from these trades for the most part because they can be particularly prone to false moves. A lot of the time, especially on higher time frames, price will respect the trend lines, but it won't always be to the pip. And there are a lot of occasions where price will run past this trend line slightly, okay? It will probe the trend line. Now traders will see this happening, they'll see the move and think, right, this is a breakout, and they'll jump into the trade only for it to reverse back on them, okay? And this happens an awful lot. And for the same reasons that we discussed in the support and resistance webinar, these levels need to be thought of more as zones rather than a very specific price point. And that's why I prefer to trade a retest of a broken trend line and wait for that extra confirmation rather than just trading the actual break. So these are the two main ways in which we can use trend lines: to buy bullish trend lines and to sell bearish trend lines, and then also looking to trade the retest of broken trend lines. So looking to sell the retest of a broken bullish trend line and buy the retest of a broken bearish trend line. Now, a further way that we can use trend lines is to apply them not only to one side of price action, but to both sides, above and below, and that will help us to form channels. So with regular trend line analysis, we use only one line, which is applied to the underside of price to give us a rising bullish trend line, like we can see in this example here. With channels, what we are essentially doing is doubling up on each of those trend lines. So in a bullish scenario like this, where we've identified our rising bullish trend line, we simply copy the trend line and look to apply it to the top side of price to see if we can attach it to the swing highs. Now, this won't always be possible because price action won't always be forming a channel, but where we are able to copy our trend line and apply it again, and it fits price and the swing points line up, then we have a clear channel. Excuse me, I just have a sip of water. Okay, so we have our clear rising trend line here. Again, we're picking up the very outer points of price, joining these two lows. We then copy our line and apply it to the top side of price to see if we have a channel. And you can see here that the line picks out the swing highs exactly. And of course it does. That's why I've used it as an example. So again, extremely simple. We're just looking to clone the regular trend line. Okay, we don't draw a new trend line. We want to keep the gradients of the two lines the same. So we copy our rising trend line from the lows and apply it to the top side in price. And you can see that it picks out these swing highs. So we know that we have our channel here, okay? So once price has respected this channel resistance line here, and we've got our two touches, we have our confirmed channel. Now, the important thing to point out is that we simply copy the trend line and apply it to the top side. So we don't need to wait for this second touch to be in place. We apply the trend line and look to see if it's respected. Then once it's respected, we know that we have our channel in place. So how can we use channels? We know now how to identify channels, but how can we use them? Well, trading channels, again, is a very simple idea and similar to how we trade the basic trend lines. And really, we have two options. So the first option is that we could just look to trade the trend line in the basic way that we discussed first, where we buy rising trend line support and sell descending trend line resistance. And so in that capacity, we can use the additional line as a target line. So if we're buying off the rising lower trend line, we can target the upper channel resistance line. And if we're selling off the upper channel line, we can target a move back down into the rising bullish trend line to the bottom of price. We do have an alternative, however. We can be a little more aggressive, and we can actually look to take counter trend trades off the upper trend line. So here, where we have a bullish channel, the upper trend line gives us counter trend opportunities. Where we have a bearish channel, the lower trend line would give us counter trend opportunities. So we can sell a test of the upper trend line. And again, using the same premise as we discussed previously. So either trading a touch of the level or using price action and looking for further technical confluence to gain the elements such as support and resistance, or Fibonacci analysis, etc. We always want to look to identify confluence to strengthen our case for making a trade at a given location. So again, it's important to note that if we're looking to take counter trend trades using the channel, we can actually trade a second touch of the upper line. So in this example here, we clone our rising trend line from the lows. And remember, we have this trend line in place once we've attached these two lows. So if we imagine we're at this point in time here where we've just bounced off this low, we have our low, our swing high, our low. So we have our lower trend line in place. We then copy that over and attach it to the first swing high point. And we can then anticipate that price is going to find resistance at a touch of that level. So we can actually anticipate that the channel will form. And again, this is more aggressive trading because it's counter trend firstly, and you're anticipating the presence of a channel or the forthcoming resistance of a channel. So this is one way that you can look to trade them, by waiting to trade the second touch of the counter trend channel line. Now, we can also look to combine our trend lines and our channels. So once we start to combine trend lines to build full trend line analysis, we can create some really interesting trading opportunities. And a really great setup that I like to look out for actually is a shorter term trend line or a channel running counter to a longer term trend line or channel, because these can give really great trade continuation setups. So let's look at an example now and I'll show you what I mean. Okay, so we can see here in this example that we have the New Zealand dollar moving lower within a broad bearish channel here, okay, rotating between the upper and the lower channel lines. And you can see that as we continue to move lower, at this point here, we start to get an interesting formation, because as we grind higher at this point, as we start to correct higher, we can actually identify a counter trend bullish trend line, okay? So we're moving within our broader bearish trends, so we know that the dominant move here is to the downside, but then we identify a shorter term counter trend move, in this instance, a bullish move, okay? So we can then look to play a break and retest of this level, anticipating a resumption of the trend. So let's zoom in on this area and take a look at it more closely. Okay, so you can see that price breaks down through the rising trend line. We have a trend line in place here. We join this low to this low. We get another touch here and it's held. We break through at this point. We then trade back up and retest it. So this gives us the opportunity to trade, to place a short trade in line with the dominant trend. So we've identified a counter trend trend line. We've identified a break of that trend line and a retest and a failure. And as we said, the broken supportive trend line then turns to resistance. So we can sell at this point here, anticipating that we're going to move lower in line with our broader bearish trend. So this can be a really great way to use trend lines and channels in combination with one another, and it can work really well to gain entry to trending markets. It also works very well in multi-time frame analysis. For those of you who saw the multi-time frame analysis, you'll know that we identify the dominant moves on the higher time frames and identify key levels, and then drop down to the lower time frames looking to find entry points. So where you can find a shorter term trend, or trend line rather, moving counter to a longer term, higher time frame trend line, these can be great areas to enter, anticipating resumption of the trend, as we've seen here. And where I said previously that I don't trade breakouts of trend lines for the most part, well, these will be the only sort of scenarios whereby I would be open to trading the break of a trend line. So where I can identify shorter term counter trend lines or channels that form, I'll then look to play a break of them in anticipation of a trend resumption. So in anticipation that the market then sells off in line with the broader bearish trend here. Okay, so we've covered quite a lot in this session. I hope that you've enjoyed looking at trend lines and channels. It's definitely an interesting subject. And once you get good at identifying these levels and get confident with them, you can create some really great trading opportunities. So it's definitely worth spending time going through the charts and building your confidence in using these lines. We've looked at how you can use the trend lines in a basic manner, looking to buy trend line support and sell trend line resistance. We've looked at how we can think about the trend lines a bit more strategically and think about the order flow that creates the trend lines. And in that regard, we've looked at how we can trade the retest of broken trend lines. And we've also looked at how we can combine trend lines with other technical elements such as support and resistance, Fibonacci analysis, and price action. So again, I look forward to catching you all next week. And in the meantime, if you'd like to talk further, please check out the website, www.littlefishfx.com. You can speak to myself and the other Little Fish traders in the live trading room. We also have daily trade ideas that we give out, daily Forex reports. You can also take a look at all the free educational material and also the indicators and the master course on the website. So please head there if you're interested in learning any more about any of this, and I'll catch up with you all next week. Thanks a lot, guys. Cheers.